if you go back and look at the explosive move in 79 to 80 or 2010 to 11 in silver, the number of times you went through what we just saw today, probably a dozen or 20 times. We had a 6% sell-off in silver early in the week between the 13th and the 14th, Monday and Tuesday. Okay. Was that right? Yeah, Monday, Tuesday. A 6% sell-off. Okay. Then we made a new high today, had a 6% sell-off. And it's option expiration day, I understand. Nah, that explains it. Because almost every time you get to option expiration day, something happens that, try to get it down. Okay, whatever. It doesn't work because we used to be $30 silver. Now we're 50, okay, in a matter of months. In fact, up on the week right now, the settlement price on D silver is going to be 6% higher than last week. So yeah, 2 6% sell-offs this week, redundant mostly, the same turf. And yet we're 6% up on the week, and yet nobody cheers about that. They all bemoan the intra week. I'm just telling you, over the next months, you're going to get more and more of those. But every time you see one that looks really scary and your friends say, oh, it's the top, buy. You do far better buying the 5 and 6% breaks than you do buying upside breakouts, frankly. It's ratio, meaning, if you go to 10 to 100, that's a tenfold. You go from 100 to 1,000, that's a tenfold. They're the same dimension. Okay. So it's a log scale ratio scale chart. You had that bear low in 1976. A year and a half after gold was legalized, it peaked at 200 and it collapsed into 1976 down to 103. And over the next 3.5 years, it went from 103 to 850. That's an 8-fold move. Much of that occurred in the last 6 months of the move, by the way. But anyway, and then gold plateaued for a couple of decades. It just sort of went sideways, up, down, teasing, but holding ground well above the 1976 low. And then it engaged again, this time from a low in 2001 that was a price of about $260. So 2.5 times the price low of 1976. But and you went from the $260 low in 2001, 10 years later, you're 1960. Oh, another 8-fold move. Same dimension as the first move, different time span, same dimension. And then what'd you do? Oh, again, you had to go into a multi-year, decade-wide range, a new reality of gold rather than the reality that prevailed from that 1983 to 2000 something. And now you're engaged in another upside. Now everybody's screaming when they look at arithmetic charts of what's happened over the last year, let's say. And they say, oh, it's overdone. We got to correct, or that's the top, whatever. We're only halfway into the dimension of both of those prior moves. We're fourfold from the last bear market low, which was $1,043 in December of 2015. We're 4,200, so we're a little more than 4 times. You go to 8,500, and then you can at least say, oh, gold's done the same thing it's done twice before since legalized that it did before. And this time under potential conditions that are far more dramatic globally and fundamentally than anything that helped spark those moves. Most specifically, the degradation of the money units by central banks when they panic about certain asset categories that they care about, banks, stock markets, so forth, and data points. They come in and they flood the world with more money, meaning to degrade the real value of the underlying currency, which is an ongoing process anyway. But anyway, so we're only halfway into the dimension of those 2 prior bull markets, and everybody says it's overdone. No, I don't think so. Okay, now look at the reality below, which is sort of awesome because it's not what you see on gold. Now, silver moves month by month, quarter by quarter with gold. Make no mistake, okay? It's the other money unit that's been around for 3,000 years as real money, okay? It made a huge move in the 76 low, just like gold, up to the 1980 high, just like gold. But silver went up from, like $6 to 50, okay? But then it also went into what? Another boring range-bound situation. down around the $10, $11 range again. And it had another bull move from that same low, in 2001, when gold turned up as well, silver turned up. Silver went from that level up to 50 again. And again, it got hit. Now, this doesn't show intra-month highs, but actually the high that's on the left in 79 got up to over 50. That high close there is in the 30s. But when you see the intra-month, they were exactly the same as the 2011 high.
Right.
Okay, and then you do what? You go boring again for another decade, just like gold has done since its 2011 high through about 2020, with sideways action. Silver has only this past week nipped out the high of that 50-year range. We're talking solely price here, an idiot chart. Okay. I call it idiot because if you go back and you factor in the degradation of the real buying power of the US dollar in 1980 to the present, or from even 2011 to the present, if silver were matching that degradation, it'd be at $200 plus right now. Okay. Something looking like the gold chart, which is compensated for those ongoing degradations in the money unit. But silver hasn't done that. In fact, I can show you a copper chart. If you go back to the 1970s and 80s, it had a range in price that prevailed between 1970, 80, 90, and into 2000, like 2005, where it was stuck in a horizontal range. And in 2005, I think it was, it broke out of that range and quintupled in a half. No, excuse me, that's erroneous. It quadrupled. In a matter of 6 to 9 months. It took out a multi-decade range and quadrupled almost in price, and then lived since then, since 2006-07, in another major sideways range, but a new price reality compared to the prior range. Silver's still just only now emerging from a prior 50-year price reality. So in a sense, silver is much lagged to many other assets. I could show you a lead chart. Our argument right now is not because silver has nipped out its highs, but because of momentum factors and spread relationship factors to gold, that silver is about to launch a handful of month, couple quarter surge out of this now 50-year range into a new price reality. And I think at minimum, that will be 100 plus. More likely, it's going to be 200. And I think much of that will occur in the next 6 months. And there is one primary signal metric that we're watching for that, and it's not price, it's not momentum of price. Silver's already in a bull market. There's no issue about it. The issue is, when does it go ape on the upside? And when we went back and examined the final months of the surge that you see there in 79 to 80, where you went from like $10 to 50 in the final 5-6 months, boom, most of that was like 5 or 6 months in a couple of year bull trend. And you go back to 2010, where you see that jolt right there. Yeah, right there, where you see the jolt upward. From there to that high, it was about $20-something to 50. So it about tripled in about 5 to 6 months. It had been going up for years already. So it was no issue. Silver was already a bull. But what caused it to suddenly go ape, to go vertical, and do it all in a handful of months? The spread relationship to gold was the signal indicator, not the dynamics of silver or its momentum trend, but the momentum and the dynamics of the spread between silver and gold. Right now, that spread is postured early this month to the present below structural levels. Well, you can see that pretty good there.
Yeah, that's the silver to gold ratio, by the way.
Yeah, we're going back to 2020 in particular. You had a big surge there, and that was in that surge when silver, in the first half of 2020 into 2021. You're going back to 2011. Yeah, so that surge right there, that's the one we're looking at. We came up out of the hole there, and in 2020 to early 2021, silver vastly outperformed gold. But then over the past few years, even though silver has been rising during that time, and so has gold, the spread has deteriorated. Okay. We've recently, since April, that spread has shot back up again strongly. You get much above the recent highs, and you're going to break out on various metrics of that spread, which say You're coming out of here. Now, your trend line, we don't plot. We have different trend lines. But anyway, what I'm arguing is that this surge that we've just seen in silver is now pressing at levels on the momentum of the spread and the spread itself that say you go any further and you're going into launch mode again. Same sort of behavior occurred at those prior pivot points where silver went from up to dramatically up. And when you looked at those original charts I showed you, realize that silver has not done it for 50 years. Many other commodities have had prior ranges that prevailed for decades and blown out of them, but silver hasn't. Anyway, I think silver's about to do a catch-up, and we know if you've been around in markets long enough that markets make mistakes. When you get bubble tops in the stock market and they collapse, later on the prior bulls have been buried, look back and say, gee, I guess it was excessive. I should have gotten out. And when it goes down, it usually overcompensates for its prior upside excess. The same is true with markets that have been depressed for too long. They remain depressed. People dismiss them. They say, there's nothing going on there. Just forget about it. They ignore it. And yet certain realities have occurred in fundamentals, so forth, and in the underlying degradation of the money unit, for example, which is something you have to compensate for. All those factors build up, and finally the market says, oops, I made a mistake. And it comes roaring out of the hole, sort of the opposite of a bubble top breaking. It compensates for the error. I think silver is on the verge of compensating for the error, and I do not think it's going to trend up to a new price reality over the span of 2 years. I think it's largely going to get there in a couple of quarters and then live in the new price reality. And I think that reality is going to be somewhere, wouldn't surprise me, 200 even.
Mm-hmm.
And if you go back and factor in, again, the degradation in the US dollar's real buying power, that's be fully justified. Okay. So I think we're on the cusp of that. And it should be very dramatic. It should not be the kind of investment opportunity that people get to think about over the span of months. If you're not in, you miss it. And all of a sudden you find yourself in a new reality. This has happened in many markets. I could bore you with countless charts of base commodities and so forth, going back decades, showing how a given asset stays depressed for so long, it's ignored, and all of a sudden when it says, oops, I made a mistake, it's gone. New reality occurs within quarters. And I think we're on the cusp of that.
Yeah, let's go ahead and take a look at the silver chart right now. We are down 5% today, a whopping 5%. Silver is back down to levels not seen in what, over 2 days now?
Yeah, really, it's up 6% on the week, though.
Yeah.
I'm sorry,
Yeah, so it's back down to at the very bottom of where we were in Wednesday. So.
Oh, terrible. Anyway, we watch silver futures. This is a spot, I think. But anyway, it's option expiration day, so no doubt some banks or institutions help maneuver a drop in the market. That's fine. Most of the longs were even thinking about taking profits. And the other thing I can stress again is gold is 4 times where it was at the bear low. Its prior bull markets of the last 50 years to them are 8-fold. Okay. You haven't even seen it yet. Imagine if silver catches up, which we think it will, but in a thunderbolt. So not only does gold have the potential just to replicate the 2 prior bulls, which I think it will vastly outpace, by the way, ultimately, silver will catch up, and that'll be an enormous move. Even if silver, if you go back 50 years and look at silver versus gold spread and ask yourself, what's the highest reading that silver had versus gold as a percent scale? And right now we're at 1.2% of the price of gold. In the last 50 years, it's 20 of those 50 years, it's been at 2% or higher. If we even just went to 2% or higher, that's almost a doubling of the current valuation of silver to get back to what's a norm over the last 50 years. If you then go back and look at bull market years in silver versus gold, silver and gold, 79 to 80, for example, 2010, 11, That spread was up to 3.5% or even 6.5% back in 1980, but well over 3%. Now, if we went to 3%, that would be a tripling in the current value of silver to gold. You do the math. If gold went to 8,500, which is to say nothing but replicating what it's done twice before, and silver went to 2% of that, silver would be $160.
Mm-hmm.
If silver went to 3% of that, you get the point. Okay. Silver has a major catch up to do, not only in relative performance to gold, which it's going to do, but in net price. And I think it will be a very compressed situation.